The pain is back. Welcome. Welcome back to another closing live. Well, another beautiful reversal. It came a lot later than expected today. This usually in the morning we'll have a brief little look at some green, and then we get a reversal pretty quickly. Today it looks like we had green most of the day, only to see pain happen thereafter in a rotation down. Thereafter, take a look at some of the pain that we've got in the markets today, starting, of course, with our indices. Let's go see what we have here. Oh, yeah, look at this. So we've got big reversal. NASDAQ was up as much as 2%, and now we are down 0.5%. Russell 2000 down 0.37, S&P down 0.42, Dow Jones Industrials down 0.22. It does kind of feel like a rug pull, doesn't it? I see your comments here. These are quite funny. Yeah, quite dramatic. Let's go ahead and see what's happening in bonds here. 1.833. Oil actually down right now. Quite interesting. And then we hop on over here to take a look at what's going on some of these stocks. Of course, I did a video on Peloton explaining what's going on with Peloton. So you're welcome to watch that to get some updates on Peloton. But look at Arrival, folks. My goodness, almost 12% down. We do have Netflix earnings coming in today as well. So actually, I believe that's today. Let me just fact check quickly here. Let's see what we got here. Earnings calendar. Keep in mind, Kathy Wood, I looked, also sold out of her Peloton once at 86 and then at about 56. Yeah, today we have Netflix earnings. That's going to be big. I'll write that down. Okay. Netflix. There we go. So Netflix earnings will be out in about 23 minutes, and so actually might be a little bit more than no, it's scheduled for 23 minutes from now. So we'll see what's going on with Netflix. I'm going to find out what's going on with Arrival here. In the meantime, let's listen to Sarah Eisen here.
2022 sales forecast to $7.78 billion. That's $300 million more than the high end of its prior outlook, which was also raised. Shares initially popped pre-market 7%. They're now down 7%. Joining us is Gina Drosos, the CEO of Signet. Welcome back, Gina. Great to have you.
Great to be here, Sarah. Thanks so much.
It's a little low. There we go.
Super strong. And I mentioned you raised in December. You're raising the outlook. Again, clearly the consumer is in a good place, but your strategy is also working. Talk about why you are seeing these better numbers than you had even expected.
Well, I think it's a couple of things. We've been on a transformation journey for the last 4 years, a cultural transformation.
Sales pitch, jewelers excited to transform the jewelry business. Okay. All right. I think the transformation is, look, we'll sell you jewelry through Zoom and then come in and pick it up curbside. All right, let's see what's going on here with Arrival, because that's the big one. Why? I mean, we talked again about Peloton. That freeze on production is crazy, and it's going to do some bad things for the psychology of Peloton owners. Not so good. Inventory blowing up. All right, let's see what Arrival has for us. So Arrival, in terms of news here, why is it down 12%? Okay, shareholder alert. Okay, just reminder, class action, Arrival, shareholder alert, encourages investors in Arrival with losses of more than $100,000 to contact the firm, blah, 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 announces class action on behalf of shareholders. No, this is just, okay, this is news from yesterday, later in the day yesterday, that's kind of just reiterating today. Just another classic kind of lawsuit against a newer company. You get these all the time. As soon as you get a SPAC or a newer company that ran and then plummeted, these companies file these class action lawsuits against the companies because it's easy pickings. It's like you got plenty of claimants when a stock plummets. Wow, look at this. You've even got Shift Technologies rotating down another 5.46%. Rivian down 6%. Oh, Toast and Tattooed Chef and Matterport down about 4. Yikes. Look at this, even NVIDIA, 3% on NVIDIA. Whoa. Amazon's getting ready to break under 3K again. Etsy 160, Affirm 63, nowhere near that bottom they hit earlier today, which was really funny. Oh wow, look at this DocuSign sell down. What a terrible day. Just most of the day, just down, down, down. But this morning on Affirm, when that news came out on Piton, I ended up buying dip and my order went through at 60.02, 300K at 60.02, which if you look was right about there. Like that's some pretty solid timing right there. That was awesome. I like buying that dip. I want to buy more of those sorts of V shapes, especially the Larry Kudlow V-shaped recovery. Then let's see, Lucid's only down 1.8. So why is Rivian down so much? I heard they announced that they delivered over 1,000 vehicles, but I don't understand why they'd be down so much. Let me see here. Rivian. Let's see what we got. All right, news. Ford is back, but stock gets another downgrade. Okay, that's Ford. What about Rivian? Electric vehicle tsunami to hit the market? Ooh. No news about Rivian. There's more news about Ford when I look up Rivian than there is actually about Rivian. Central Bank, Federal Reserve, that is, released a paper on central bank digital currencies. Honestly, it was really boring. I mean, quite frankly, they didn't really go into depth. They just gave like a very generic outline of risks and benefits and then said, hey, if you have commentary, send us your commentary. It was just like 40 pages of blah. That's ridiculous. Made a nice scalp from a firm's sold puts today. Sold puts are probably very nice right now. Yeah, just because puts are very, very expensive. And so usually when the market goes down, puts become very expensive. And when puts become so expensive, you can really farm those sold put yields. May as well. Okay, let's see what we got. Okay, late session sell-off, they say. I wonder why. Let's see. Let's see what we see here. Consumer discretionary materials leading declines. Amazon lags the most on a basis point out of the megas. Geopolitical jitters are ramping up, with the U.S. approving the sending of 3 Baltic NATO members, sending military weapons made by America to the Ukraine. Oh my gosh. You know, this is just what you need is more FUD and fear about everything that's going on right now. It's China's Evergrande, then it's invading Ukraine, and then it's inflation. There's so many boogeymen out there. Shift Technologies and the small caps, I'm not in right now, but I'm watching them for the bottom. So that way, once I feel confident that we hit the bottom, but then really get multiple confirmations after that above certain thresholds, yeah, Shift will be a rebound play. But for now, it'll probably become penny stock. Kind of sucks. Seems like there are a bunch of Ackmans in the chat. It's probably all him on spam accounts. Don't forget, China will invade Taiwan as well. We don't need that fun. Woo! You know, I thought I slept enough yesterday. I just think I didn't have enough coffee today. And you know what happens when you don't have enough coffee? Then it all hits you a little harder. But that's okay. I'll just drink it through a straw here. Here, you know what? While I do that, we can see if Kudlow's got anything to say for us. Given that CNBC is on commercial. Oh, it's Clement Countdown. Here we go. Let's listen for a second here while I slurp this coffee quietly.
Last year was cleared of criminal charges for trading stocks, allegedly based on confidential briefings he got pre-pandemic. I believe he was selling hospitality stocks. As you know, hospitality stocks got crushed during the initial phases of the 2020 lockdowns.
Sure.
He sold them. He and his lawyers, I should point out, convinced the Justice Department that a criminal case should not be brought. Why? Because he basically argued that a lot of this information was public.
Boring. All right, somebody says Hedgeye. They've been calling. What do you mean they've been calling? They've been calling 3/4 of deflationary economic macros. Oh, why am I further? There we go. Let's see what they're playing. Oh yeah, okay, I've seen them before. Yeah. I'll explore that. Look at Twitter. 42 man. Okay. I will see if we can pull it up and then we can comment on it. Let's see here. Fed's white paper on CBCs. Yeah. I read it. Boring. Live shot of Peloton shareholders. Oh, I got to show you all this one. Hold on, let me pull it up. It's actually a good one. Hold on, where is it? There you go. Retweeted, not Jerome Powell. Look at this. Live shot at Peloton shareholders, and it's the Peloton ad. That's funny. Peloton to sell NFTs of bikes. Oh my gosh, there's so much ridiculousness. Yeah, it's wild times. All right, so let's see here. People posting graphics from Bloomberg Goldman 42 macro. What? Yeah, let's try to find out what y'all are talking about, because I'm not seeing super exciting things. Well, super dramatic things. Here, Vix ratios. Darius Dale, the telltale sign of the impending non-collapse. High-yield credit spreads have barely budged year to date, despite all the residual pain caused by the rotation in the stock market. We could see an uptick in post-OPEX, but if you but you must buy the deposits here. Okay. Commentary on the CPI read. Nah, I don't know. I'm looking at some of y'all's recommendations here. I'm not seeing anything super entertaining. Let me though go ahead and look at the back end here. See, euro falls to French multi-year low. Prices to rise as virus disrupts meat industry. Oh, so Chipotle can raise prices more. Earnings beat provides shelter from market storm. The S&P has rallied 80% of all time during prior earnings seasons. The reporting cycle so far isn't shaping up to be one of them. But as bad as things may look, the season still offers solace to equity bulls. When companies delivered earnings that crushed Wall Street estimates, the market rut has steered clear of them. The results are out for about 1/10 of the S&P 500 firms, and so far those have surpassed profit forecasts and have been rewarded like few times before. Earnings beats have on average outperformed the S&P by 2.9% a day after the results. Yeah, we'll see if we end up getting bailed out by tech earnings. And then Netflix is going to be big. You know, Netflix comes out in 11 minutes. Yeah, that should be pretty juicy. Juicy. Yeah, I can't really say that anything right now is like substantially undervalued. I think there's just so much fear in the market that just like it's the everything sell-off, the everything bubble. Oh yeah. All right, let's see how things are falling into the close. Just what we want, more of a buying opportunity. Oh dear, the buying opportunities get exhausting. Shift. Whoa. Down to $2.21. This has got to be all-time lows. Yeah, it is. Oh, could you know what really is crazy is, could you imagine the what's it called? It's time to wear the Mario hat. Yeah. Could you imagine the psychological impact of these stocks going down on the employees who are paid partially in stock-based comp? Not good. Hold on a sec. Here we go. This will be a little bit more appropriate for the market. There we go. You know, when the day's mixed, or you get the U-turn, you get the Waluigi U-turn, but then you get red turtle shelled. Oh, man. It's just like, whatever stocks you own, you better hold a banana out, like hedge, because you're about to get red turtle shelled. And then you spin out, and you lose place and pace. Yeah, it's a mess. Oh, dear. All right. So look at even NVIDIA. I mean, that just blows my mind, that NVIDIA plummet here. I mean, this is a nice one too. Look at this. We can draw this pretty consistently here, I believe. Let's do a couple things here. Why don't we throw on first? Let's see if we can get a trend. Close. Yeah, no. Yeah. All right, we'll see. And then let's throw on a fib here. The question though is from where? Let's grab the last bounce off the 100 and maybe go from here. Yeah, well, from the bottom up, that is. From like right here around 197, grab that up to the intraday top. So where's our retrace? Are we seeing a retrace? Well, we hit that 50 level pretty nicely. It's almost a triple bounce off that 50 level. And we initially sat at that about 23.6 level a little bit, sat at 38 level a little bit. Fib, not bad actually right here. Look at that, bouncing off the 23.6 right here. Just not a bad little guide. So does this mean we potentially retrace back down to 200? Yeah. That's literally what it could mean. Another one that really follows the fib well, we'll see, is ADA, which I know isn't a stock. It's a crypto, but it's another one that's has been pretty consistent here. Yeah. Okay, but it's found its new little buddy over here, this lower over here, the 102. But I mean, that's a pretty nice bounce right there. You had a little bit of an intraday breakthrough, but you never got that solid confirmation of a breakthrough, and so you're bouncing back off on the day chart. Not uncommon. SoFi trying to push back up here. Whoa, look at the bounce. It's perfect. Oh my gosh. And then you always get the losers in the comments who are like, draw enough lines and sure enough, it'll bounce. Come on, man. Like, this happened while I was live streaming. It's not like I saw the bounce and then somehow added it. That's insane. I mean, that is a perfect picture freaking perfect bounce. That 1470 line, it's consistently been quite strong. In fact, if you just zoom out over here, I mean, why would you not want to buy under that 1470 line right here? I mean, look how little, how rarely we are below that 1470 line here. And I only have 3 lines on here. And that is a bounce on the minute chart, which is insane. But then again, things can break. Like C3 AI had a brief line, broke right through it. I mean, broke through it so hard. Look at that. See, you had the brief building of a line here with a bounce, oversell, comeback, near bounce, but nope, didn't care. Just kept on going. Ugh. Yep. Super common. More bad press about BlackRock, Wall Street purchasing single-family homes, and government encouraging them to do it. Well, I don't necessarily think there's a horrible thing about investors purchasing homes. A lot of investors can buy homes, fix them up, bring them to reasonable levels of safety and quality, and then end up selling them to home buyers when a lot of home buyers couldn't take on fixer-upper projects or have the skill or the know-how or time to do it. So I think there's a benefit to this, and it's not like you're taking family homes away from people who want to rent or live in these homes because they come up as rentals, right? I mean, it'd be one thing if like corporations were buying a ton of homes and then leaving them empty. That would be scummy, right? Like that would be so lame because now you're just literally taking inventory off the market and there's no chance that it ever comes on the market. 40-ish% of our society rents, 37 to 40% of our society rents. So you gotta have rental homes. But no, BlackRock is buying them and renting. No, BlackRock is buying them and renting them out. They're driving up the price. Yeah, I think that's the big argument that's made is that, but because of this, they're driving up the prices because they're competing with home buyers. This is true. That is true. The more investors compete for purchases, even if they do eventually rent them out, the more prices do go up. You do have that competitive push to, and even if it's just preferential, right? Even if sellers are just like, well, I'd rather just sell this investor is just going to give me cash, and I don't have to deal with the home buyer's appraisal or their home inspection and all this other crap that nobody really cares about in the institutional world. Then yeah, this is true. You do face those sorts of problems. But anyway. See, this is the kind of drama. Here, it's inconvenient to pull this tweet up really quick, but here's a stock account that a lot of people follow, FX Hedge, and they just tweeted, Fed could hike next week. Keep options open. Of course they could. They have to finish tapering first, though. But it's that fear that, oh no, the Fed could hike sooner than expected, or no, the Fed might go for a 0.5 point increase. Usually they don't rug pull us. Usually not. They've been pretty transparent. That's not to say they were right, but they've been relatively transparent. I almost think, but I do think their December meeting was overly bearish. We'll see. We will see. All right. So what else is going on in the indices here? Why is there pain? Why is there not pain? You're probably going to see this until at least the Fed meeting. That's my expectation. People are like, Kevin, when is it going to stop? I don't know. Hopefully after the Fed meeting. Fed meeting's next Wednesday, 6 days from now. We also get Tesla earnings. But you're down 1% across the board here. Volatility index up to 25.75. Now I know there's been a lot of continued sort of dipping and such here, but just as an example, if you're ever wondering, just as an example, what, for example, the buy sell alerts would do for you in the Stocks and Psychology and Money Group, I mentioned earlier in the stream that I bought a firm right here at 60.02 is when I bought right in this dip. And then I sent out at the same time, the same like 20 seconds, sent out an alert like, hey, sell off here, I'm buying it. There's no guarantee in the short term you're going to make money. There's really also no guarantee that in the long term you're going to make money. But in my opinion, you take advantage of little pain points. And even if you're picking up $3-4 here, or you're just building out a share position, sometimes for folks who can't sit in front of a computer screen all day long, those alerts are nice. So remember, you get lifetime access to that in Stocks and Psychology and Money Group. I always like to say the proof is in the pudding. So there's the pudding. Anyway, so this is what I bought. You could see the time. I don't know, does it show the time? No, it just shows the date, but it shows you the price. But anyway, it's just little things like that. Again, no guarantee. Like I can't tell you what's going to happen in the next 30 minutes or the next hour, but I do like to build out my positions. And right now, I think there are phenomenal opportunities to build out on a firm. See, what's happening with the firm is one of the things people are concerned about is that sell down on Peloton potentially not contributing as much. Peloton used to contribute as much as 11% recently to a firm's revenues, which we expect to go down substantially. But that's expected to be okay. Because it should be offset by massive new partnerships over at Amazon. Even I see them now at Best Buy and Walmart and Target. I mean, they've gone everywhere. They've exploded in the last 6 months where they are. So I'm pretty optimistic there about earnings. But first, we'll start with the bell, and then we'll go ahead and see what Netflix has to say for us. I'll also pull up the expectations for Netflix right now. But in the meantime, do check out them programs on Building Your Wealth link down below. Coupon expires in 8 days when it's my birthday.
A long way from the highs. As the bell rings, the S&P 500 and the Nasdaq both down more than 1%. The Dow down 0.85%.
Just an ugly turn, with stocks closing at just about session lows and down 1.3% on the Nasdaq. Welcome back to Closing Bell. I'm Sarah Eisen, along with Wilfred Frost and.
It's so much more pleasant when she reads out what the losses were than me. I don't know, in my take. But anyway, Russell down 1.88%, Nasdaq down 1.3%, S&P down 1.1%, Dow down 0.9%, not quite that 1%. Okay, folks. Implied move today on Netflix, 8%. The average move on Netflix is only 3%. The implication is 8.31% on Netflix. We are looking for EPS adjusted of 0.883 and regular EPS of 0.81. We're looking for revenue coming in at 7.71. And we're looking for a net of 457. Let's see if we end up getting it. This is a big one. I think this is really going to set the stage for tech earnings. Okay, it's out. Revenue comes in. Okay, what is this? Hold on. This is streaming paid customers. Beat 8.28 million customers versus 8.13 expected. That's a beat. We've got EPS comes in at $1.33. Holy crap. What? Why? That's really good. But the stock's actually sinking. What? Oh my gosh, the EPS came in really, really good. That's amazing. What? But it's hold on. No, hold on a second here. I don't know if they're messing up or if I'm messing up. Maybe the EPS read was not right. Hold on a sec, because the stock is going down. Let me try to get info on this. That's not good. Good beat on the members. I don't see prior analysis, period overview. I don't know what happened, but it does actually look like now they're saying the actual EPS Q1 estimate was $3.37. They only came in at $2.86, so that's a miss on the EPS. But they had substantially more streamers than expected. Well, not substantially more. They came in with 8.28 million versus 8.18. But wait a minute, this isn't good. The forecast, the outlook is not good for new memberships. Okay, that's not good. So that's potentially a huge pull forward. That's going to hurt Disney and the other streaming services too. Okay, yeah, this is not good. So Q1 estimate, let's see here. Okay, this is the forecast. So the forecast for Q1 is that they're going to add 2.5 million users, and the estimate was 6.26 million. Oh, the stock's down 8% right now. Oh my gosh. Yeah, the EPS is really confusing. I don't understand what's going on with the EPS. I got it. I figured it out. Okay. That's my fault, the way I read it off. So I was right about both of the things that I said, but I explained the numbers incorrectly. So the EPS expectation for Q4 was 0.81. And for Q1, we were expecting, let me use a darker color here. For Q1, we were expecting 345. And so this is the forecast, right? Because this is forward. So this is the forecast here. We actually ended up with 286 right here, which 286 on the forecast is a decline of about 18% under forecast. That's not good. Also, the forecast on operating margin, 19 to 20%. The estimate was 22%. That's also not good. So yeah, this is actually very bad. and that's my fault for getting confused between the Q. You see, they're writing it like crap here, honestly, just the way it's coming in. Okay, the Q1 EPS came in at $1.33. I'm sorry, Q4. See, I'm so sorry, I'm confused. That's why I'm writing this down now. Again, this estimate for Q4 beat substantially. 133 versus 81 cents. That's a 64% beat right here. That's good. The problem is in the forecast, folks. That's the problem here. And that's not going to be good for the market, because the market is going to be freaking out about the idea or the implications that, oh no, this is a big potential negative headwind for the economy. Like, is Netflix potentially the bellwether of people not spending money anymore, of people turning inwards? We already have enough fears that maybe there's going to be some form of a recession. And this is the first of the tech earnings. This is a disaster. If this is the beginning, it's a disaster. If this is the beginning of earnings. So again, like I mentioned, do expect other streaming style plays to get hurt on this. Peloton usually gets hurt on this, but Peloton got hurt enough today, so they're not moving. Peloton usually has consistently in the past gone down on news, on bad Netflix news. You probably have Diz going down. Yeah. Oh yeah. No, Disney not happy. But it makes sense, because you're kind of like previewing what could potentially be coming for Disney via Netflix, right? So if we look at, let's see if crypto's moving on this. Well, that's the day chart. No, not really. SoFi down about 0.93 here in the afters. It's really playing this line here, which is not highly unexpected for SoFi. Roku, Matterport, Lemonade, these guys down a little bit here in the after, but it might be too early to actually tell anything for. Oh well, Roku makes sense that Roku's down. Matterport usually does not have a lot of volume in the after hours, so you see a lot more volatility there in the after hours. I usually don't pay attention to that one in the after hours because of that. But Roku has no, Roku doesn't have much volume either. No, just a few thousand shares here. But anyway, Roku TV streaming, right? And if Netflix got burned, that's probably not good for Roku. Let's see, Spotify. Let's see if they're moving. Spotify, yeah, rotating down as well. It looks like in the after hours they are down, down about 1.1%. But that Netflix crash, holy moly! So again, in case you're wondering, why is this happening at Netflix? It's down just over 10% right now. The easiest summary I could give you is this sheet right here. And let me just take an orange color here or whatever. So the expectation for Q4 was earnings of 0.81 cents. They came in with $1.33, which is a nice 64% beat. That's good. We're happy about that. That's very good. The problem, folks, is here. We were expecting a $3.45 EPS for Q1. We ended up with a forecast of $2.86. We also ended up with, instead of 6 million subscribers expected for Q1, like only 2.5 million expected, lower margins. So less money, less subscribers, less margins, bad. Everything just bad. And so it's no surprise that things down 11% on the news. It's bad. It's just not good news. Yeah. Let me see what other news there is here. Well, that is not good. Why? What I want to know though is why. Is it because are people done being at home? See, that's the thing. Like, are people just spending less money at home and more money out and about because they're over COVID and they're done with the pandemic? That's possible. Does not necessarily have to be a bellwether for all stocks. But oh, look at that. Look at this red ring. Ugh. Wow, look at that. It was so, I was getting a headache. I'm like, why is my head hurting? I'm like, oh, this hat's killing me. Look at that. Oh man. But anyway, yeah, locked at COVID reversal play. Absolutely jolly. I think you're absolutely right. Quick reminder, if you like how I can put the comments up on here, StreamYard, Go to metkevin.com/StreamYard to learn about professional broadcasting software. It's pretty amazing. Thanks for becoming a member here, Prof. KG. Lockdown trades are dead. Probably. People losing jobs and can't afford it. Yeah, the unemployment claims numbers did come in higher today. We're wondering about the seasonal adjustment there, but it's so weird because there's so much demand for labor right now. Let's see here. People are getting your courses on growing your wealth so you don't need Netflix. Hey, that's one of the things we actually talk about cutting out is Netflix. That's true. I think the market is saturated. Everybody already has, Blau could be right here. I mean, if you think about it, it's like, hey, like there's a limit to how many people you can add. Like the people who are going to buy Netflix bought it during the pandemic, right? So, I mean, look, if Netflix is a bellwether for what's to come for tech, we're all about to get a massive haircut, or whoever's actually in the market is about to get reamed. And there's no money left to buy. Alternatively, Netflix is either potentially one-off, or it's some form of its own disaster, as we've mentioned here, a COVID reversal play, saturated. Everybody who wanted it has it. Maybe it's too much competition for Netflix now. Yep, that's true. Netflix is boring. The series are too short. Well, canceled Spotify and Netflix, kept YouTube and Prime. Well, there you go. Okay. It's okay to buy puts. We won't. The time to buy puts was when I was shorting the market and everybody was making fun of me for shorting the market. That was the time to buy puts. Right now, puts are very expensive. But hey, you get a fall like this, maybe. Okay. Well, let's now jump on over, and I want to see if there's a little bit more. Okay, we're now almost 12% down on Netflix, with about a 4% decline on Disney. Oh, that's crazy too. I just sold out of the rest of my Disney earlier today to fund some other purchases. I traded into a large set of new options, about 1.5 million of new options, and I sold some smaller positions. And Diz was one of those that I sold. So Netflix board to recommend declassifying of board, removing supermajority voting provisions. We've got, I'm going to see if I can get some more details here. Netflix did not engage in share repurchases in the fourth quarter. They funded the acquisition of some company with cash on hand. Netflix anticipates being cash flow positive, free cash flow positive in 2022 and beyond. Okay. Okay, retention and engagement remains healthy. However, acquisition growth, quote, has not re-accelerated to pre-pandemic levels. Oof. So acquisition growth, they're not even saying it's down from the pandemic. They're saying it's not back to the level where we had it before the pandemic. Jeez, man. That is kooky. Yeah. Okay. What else? Streaming memberships paid 221.8 million versus 221.6. 1.65 billion hours viewed for Squid Game in 4 weeks. Oh my gosh. Odd blur in the foreground. Sorry, that's the Topo Chico. Thank you. Yeah, the margin, they're reiterating the margin here. I'm just seeing if there's anything else that's new. Profit climbs, beats estimates for Q4, but craters on the forecast. Oh, gosh. It's so bad. Okay, let me see. I'm going to pull up their actual result here. And let's get a little bit of a breakdown on that. Okay, here we go. So this is just their press. No, that's boring. All right. Let me see if I can get this. There we go. Netflix. Okay, Netflix. Here we go. No, still, where's the multimedia stuff? I want to find it. You can download the multimedia here. That's exactly what I want to do. I don't know. They're making it so complicated to get this information on Netflix. Oh, here we go. Okay, I got it. Letter to shareholders and financial statements. Finally. Okay, here we go. So we achieved several milestones in 2021. Best TV show of the year, Squid Game. 2 film releases, Red Notice and Don't Look Up. Okay. Summary results here. This was the pain right here, is the forecast. The far right column's the pain. Wow, that's crazy. Growth going down to 10% at Netflix. Look at that big like bell curve here of growth you had in at the end of 2020 and probably much more even during the pandemic. Wow. Okay, let's see here. Operating income. Oh, expecting a big bump there in operating income. So where did the operating income go in Q4? That's interesting. Yeah, look at that. Big plummet here in operating income. So that had to have been like a one-time expense or something. Okay. Year-over-year growth for streaming members down to 8% for growth for streaming members. And then again, expecting to go cash flow positive, free cash flow positive this year. We slightly, you got to be kidding me. We slightly over forecasted paid net ads in Q4, 8.3 actual compared to 8.5 in both the year and quarter. Okay, fine, Q4. I thought maybe we were talking about Q1. Slightly over forecasted. Totally missed. Asia Pacific increased 2.6 mil versus 2 mil last year, same quarter. Emerging market was our largest contributor of paid net ads, 3.5 mil versus 4.5 last year, same quarter. Oh, wow. Look at this. Kathy Wood's talking about the real bubble could be building in, it's interesting. So in value-related stocks is where the real bubble could be building. Well, hold on, let's listen.
Inflation and bad deflation at work here, but now we're seeing the beginning of cyclical deflation. And I think we're in a risk-off period. I know we got hit today. A lot of growth strategies got hit. There was a shift towards defensives. And I think there's a lot of confusion. But if growth is going to be scarce.
This was 7 months ago, by the way.
Our kind of strategies, which generate revenue growth rates in the 25% plus range, are going to shine longer term. We are not in a bubble. We are not in a bubble. Our strategies would be flying if we were. I think we have not begun rewarding innovation for what's about.
This is December.
And so that's where our conviction comes from. And we couldn't be more excited about what's going to happen now. I think the bubble, if you ask me, is in the benchmark stocks.
Wow. That's an interesting kind of revisit to that quote there. I saw that up there. I had to throw that in there. I hate to say it, but like, did anybody feel like, and this is so terrible, did anybody feel like a little like cringy listening to Kathy kind of in July of 2021 and then in December of 2021? Like, I had the utmost respect for her, but like, it's been exhausting. It's been a ride. You know, when's the Kathy Woody and deflation coming? I don't know. I don't know. I mean, and don't get me wrong. Like, I'm a big fan, and you know this, of concentrating into my favorite techs. textile stocks. But boy, oh boy, it's exhausting. Oh well. Okay, anyway, so continuing here with Netflix. Netflix Global, paid net ads. We got the graphics here. Okay, for 2020, we're targeting an operating margin of 19 to 20%, assuming no material swings in foreign currencies. Dollar has strengthened, and the dollar's appreciation has cost us roughly $1 billion in expected 2022 revenue. As a reminder, we don't hedge. Netflix wants you to know we do not hedge. It's for currency risk, right? So they just suffer and bite the bullet, basically. Yeah, look at that inflection. Ooh, an inflection in operating margin. Witcher. Okay. I'm less interested in their talk about their shows. I want to know a little bit more about margin and such. Growing competition. Okay, we know about that. ESG. Okay, comparing long-term stock performance. Nobody cares. No, that's it. Okay, not much else there. Let me see if there were any other notes coming from. So other notes from the back. Reiteration of the same. Wall Street Journal just published their article on this. Yeah, wow. It's time to change the title to Netflix Crash. Let's quickly see how some of these are. Oh my gosh, it's still going. It's literally still going down. Oh my gosh. It's down now 14.3%. It's worsening. Oh my gosh, that's terrible. That is not good. That's, oh wow. Oh yeah, look at all these losers here. Hold on. There we go. Netflix down 14.5%, followed by Roku getting smashed, coming down 5.21. Disney down 4%, Spotify down 2%. And for some reason, just throw Robinhood in there. Why don't you? Oh my gosh. Yikes. Hey, but Enphase is up 0.5% in the after hours. Oh man. Let's try Tesla. Tesla 991 in the after hours, down about another 0.5% in the after hours. Yeah, was that the next one? Faded Polo nails it. So this morning, when we did the terminal code, we got a censored SH9T. Probably. Oh my gosh. That's awesome. Buy the dip song. Yeah. All right. Well, there you go. Craziness. Crazy. All right, folks. Well, thanks so much for being here. Check out the programs linked down below on Building Growth. We'll see you in the next one. Appreciate you. And until later tomorrow. See you. Bye.